All right, everybody, it's a Monday and let's get right to it. How's everybody doing today? Get it loaded up in the chat and let's get it for a holiday week. Should be an interesting week, quite frankly. I want to get to a couple of things today, a couple of strategy things. I posted some stuff over the weekend about VWAP and exponential moving averages and some techniques, some things that are real common out there. And I want to talk about how we use them with harmonic patterns because we do harmonic patterns exclusively here. There's so many things with technical analysis that can be incorporated into your plan. The real benefit of everything we do is the structural levels, framework that give us really those natural limits of supply demand, buying, selling. That's what we do. We're here Monday, Tuesday, and Thursday, 12 noon Eastern. Again, hit the subscribe button to get notifications and hit the like for me. I'd appreciate it. Anyway, what's going on, chat? How was your weekend? How's everybody doing? An early happy Thanksgiving. Oh, Black Friday. Coming up Friday, but we already launched it. Go to my blog, everybody. Listen, it's the software seminar deal. I'm not going to shill it too much, but I'll shill a little. Get here, the Black Friday special. B Friday, okay? That's the coupon code. A couple people asked me where to get that 15% off B Friday. And then you get to come to the seminar, which is December 10, which is going to be a real intensive strategy session. And then we will you get a couple of the things with that. Also, take the trial. If you're new, please take advantage of our free trial. Just simply send your username to hpc@sr-analyst.com. Everything you need is on the basic members page, but everyone knows that here. And the books and everything, all the resources, you guys know where to go. So, again, if you need to renew or you need to re-up membership, whatever, now's the time. You have any questions, get to us on the Discord. That's the Discord community here. Again, right there, number 4. Click that, log in there. And also, I mentioned this towards the end on Thursday. Check out number 5, a new harmonic pattern cheat sheet with everything you want to see in one simple document that explains everything about harmonic patterns and the strategies. This was great, guys. You get David and the rest of you. Thank you so much. This is amazing. Look at that. That's our cheat sheet. Really beautiful. So get access to the cheat sheet, other resources, all there. As a basic member, that's free. All right, let's get to the charts. Listen, I want to clear out crypto early, fast, and as it is in a slow meltdown, complete meltdown phase. Let's stick to the patterns. And let's line it up. Look, Ethereum is just a slow bleed back down for what we would normally look for on a retest of a type 2. Look, here's the initial completion of the Gartley. We talked about that since September. Beautiful reaction, but runs right into our anticipated end of type 1 trigger. Sets off the type 2 return. Back down. Now, this is the thing I want to talk about today because when I get into, I'm going to talk about the SPY and the Qs and some option strategies today, tomorrow, maybe even, well, Thursday we won't be here. Thursday I'll be eating turkey, as most of you will. For those outside the United States, you should definitely participate. We'll let you celebrate Thanksgiving with us. Greatest holiday period. But today, tomorrow, we'll talk about it. But I want to talk about it respect to the levels. And I think the levels are exactly the game plan for what we need to frame out. And then something like VWAP or EMA or whatever you want to use that helps you to see the market more clearly, go for it. And you know, the other thing, one or two people referred me to some young guys doing a great conversation, and they've got so many more followers than me. It's amazing. guys that are in their 20s just killing it with options. And I trade options. I trade them longer term. These guys are scalpers, and I'll give them a shout out. I think I tweeted them on a couple days ago. But great discussion. I like those guys. I checked them out on Friday. Let me see who those guys are. I'll have to retweet those. But they were exclusively VWAP. And I was like, boy, you guys are real good. If you guys could bring harmonic patterns into your discussion, I think you would be super on fire. But they, working for them. And a lot of people do use VWAP. We look at the harmonic patterns. Why? Because that's where the natural limits of supply and demand get exhausted. The framework, the 1-2. We see it over and over again. So, with something like a VWAP strategy, with your harmonic levels, it just reinforces, gives you, I think, even more clarity. Oh, really quick, this is what I was talking about this morning. Here's something I posted this morning with a little VWAP chart like this. There you go. The blue line's the VWAP. All right. A lot of people are just trading that when it gets over. But when we throw that in with a harmonic pattern, knowing there's a bat, that's a type 1 reaction, have to come back down for a type 2, helps us really kind of frame out exactly where to be looking for that turnaround. So that's some of the stuff I'll get into today, and this was today. Quick flash up to finish the target 2. It hit target 2 on the reaction and came all the way back down. We just jumped off the hop a little while ago. But let's get crypto out of the way really quick. Crypto is a dumpster fire. Thank you, VWAP. Yes, thank you. VWAP, volume weighted average price. It's a standard technical analysis indicator on TradingView. And that's something else. I don't want to apologize for it. But my focus here is harmonic patterns. It's the strategies. They are the strategies that surround harmonic patterns. I feel like most of technical analysis, one way or another, gets encompassed in the measurements. But the VWAP, I think you've got so many people looking at that. We overlay it with the structure. It's, again, reinforces the picture. Don't want to get too many lines on there, but I just thought that I was really taken by what these guys were doing. And again, I think I want to try to connect with them and give them a shout. A bunch of young guys. So there's a lot of good traders that I have found were young guys that are, 20s. I saw one guy as a teenager in high school trading options and showing the results. Really good stuff, grinding options, flipping, 30 to 50 to 100% and, day trading them. Still, it's all about the levels. I think no matter what you're going to do, it's all about the levels. So let's talk about crypto levels. Because let's just run through the top 5. And we're going to maintain this top 5 crypto list and make it easy. Ethereum, why? Because it has this beautiful pattern. And you have the larger crab pattern. All right. Is Ethereum dead? Is it going to 0 or 100 or lower? I don't know. I'm going to look at what happens on this check back and take a look. We've been saying 1075. 1075. And even since this type 1 termination that set off the type 2 return, we were looking for 1225. Tell me what's going on here, everybody. Not looking good for any kind of serious response. And we would want to see that come back down within the framework. Our minimum levels, again, 1075. You do nothing. You do nothing until then. And that's, I think most people are at that point. You're either holding crypto, hoping your brokerage, your exchange doesn't go bust and take your crypto, or you've got private keys and you've got it off exchange, okay? Or you're waiting for 2025, which is, the justifications that I'm seeing in the space are really not helpful to the current condition. So I think a lot of people that are talking about, crypto as an adoption play or whatever, I think miss the primary basis for everything that you do when you involve yourself with financial markets, which is what is the price? What is the true value? So we've been talking about that. Everything that, every long opportunity we have looked at, we've been saying is a reaction until proven otherwise. And here we have a type 2 return on Ethereum, and it's just not doing much. There's really, it's not very constructive. We're still waiting for that check back and the possibility for this to run lower levels. Absolutely. And so that'll happen likely this week. I'm thinking before the end of the month, you come back and you retest these lower levels. You make a run to the 1,000 or the 958 number, which is the hop on Ethereum. But that's probably not the best one. And we might even want to change these because I think this thing is vulnerable. So number 2 on our list was Binance Coin, and I think this thing is probably going to do a bigger wash now. We talked about, and we were here 2 weeks ago. Amazing how things have changed. 2 Mondays ago, we were here, okay, and witnessing this crazy action. And now you're selling off, okay? You've taken out target 2. We need verifiable reasons, folks, for things to do what they need to do. You fail a target 2 like this off of the shark, 228 on Binance Coin. It's got a long way to go. Long way to go. And even your BNB weekly stuff, I want everyone to start to warm up to the fact that this needs work. Your 886 all time is $94. I'm not, no bullish shark. No bullish shark, no. Bearish. Look, these are all continuations of this year-long bear market. Fundamentally, I don't even want to go there. I don't want to rationalize, hey, this is, Binance Coin and they've got X reserves and they're this and that. No, the price action is diving like a duck. And these 2 back-to-back patterns, this bat pattern, and then the fact that we got a shark on the retest and had this crazy manipulative run. Folks, this is a massive exhaustion, massive bearish engulfing, bearish reversal that is about as ugly as it gets, and that continuation and follow through off of the structure alone, why not do a 1618 down on this move? 181, 180, something like that. Will BNB go to 40? No, but I think there's a shot it could go to 100 or 95. Listen, where we are with all of these, remarkable. But with all the crypto, I'm sorry, you have to complete the bell distribution curve. That's all these are. That's all these are. They're all bell-shaped distribution curves like this, and the markets tend to do this. Here's the left side, you come up, and then the right side back down on 88.6, something like that. And we've seen that a lot. The 886 all times, yeah, it's like 70 or so. So that's where I'm sticking with it. I really, we see it in Bitcoin too. We've seen it in Bitcoin a few times, where the cycle just simply doing a bell-shaped curve at this point. We have theorized about the 886 for a long time. It's about 11,000, depending on where you're pulling it from. 11, 8, 10,000, really doesn't matter. Let me get the all-time history for Bitcoin here, and we'll look at those. Where'd you go? Couple of bat patterns. We've been here before. Okay, that's the thing. We've been here before. There you go. And it's just we're dealing with a larger distribution curve. Look, the last two bear markets are like this. Okay? Once you start to roll over and then you're pulling the 886, you're setting it up. Actually, this was why there, because your B point reference right there is ideal. You come to the 886. If you're Bitcoin right now, you're like there. You're at like 6,000 and you need to go to 3,000. And we saw that again 2019 in a smaller cycle. Yes, this is a cycle, and this is when they say cycle, they mean this. Up and down. That's a cycle. You see it in commodities all the time. This one's just a massive one. But this one doesn't change. All-time 886 off of there. Yeah, off the all-time 886 goes even lower. I just don't, there's no value here. And until for what we do, patterns, confirmation, this is our edge. This is what gives us our advantage on understanding where the natural levels of supply and demand are. So if this has got to get liquidated, which it does, then you're in trouble. You're in trouble if you're holding on to Bitcoin. And I think if a lot of us have heard the narratives, the pumpers, the influencers of the hodlers, which has been a total disservice to what everyone truly is, which we are all just speculators. And I've said that for a long time. We are all speculating, and these are, the crypto trades like options. I've said that a lot. Crypto has a tendency to trade like options. Unfortunately, a lot of this crypto, when it goes completely bust or gets real valuation, then it's only then when you see what the true supply demand of it all is. We're in the final phase, folks. And I'm not going to back away from Bitcoin 11,000. Don't even talk to me until then. So keep it tight on that. And then let's go. I switched our list around a little bit. And let's just wrap it up. Look, Doge, for that speculative juice we were looking for. No thanks. No thanks. On the 4-hour, remember this? It was a bat pattern. Harmonic dud. Here we go again. Another HSI signal, but why? Probably down to the hop level, back to 6 cents. It's tough. Nothing here. Nothing shaping up. You have a check back now, but what? Why would it bounce here if you didn't go 1 or 2? So not really for what people were thinking about a couple weeks ago. Yeah, completely wrong. And then the other one, which was, gosh, that was doing a lot better until it decided not to. And that is Cosmos. And we were saying 11 or 8, and it's clearly 8. Going to be 8 down here. Yeah, retest the crab pattern. Retest the crab at 8. And you might even get another pattern set up like this. Something like that, maybe a bat pattern. So again, that maybe is 675. Doesn't look good if you're trying to fish around crypto at all. You're gonna have to step aside, let this thing wash out. I think tax loss selling has yet to hit, and then you hear of continued problems. And let me just quickly run through so we get away from this and get on to some better opportunities. Here's like Solana. That's in a death spiral, folks. That is a death spiral. And ever since the last harmonic strength index signal, okay, talk about levels, it's been a complete dud, straight down. I think it goes to $1. I really do, because of you've got some shark formations, shark patterns, what have you. I don't think any of this is going to be of value until you come all the way back down to your original supply spot, 280, $2, something like that. It's a difficult proposition to accept, but that's where you go. And that's the thing I keep thinking to myself is, where will be the opportunity in the future? And I think the opportunity will be when all of these that were 100, 200, what have you, come back to $1, or those like Cardano that were up to, $3. Look at that, $3. Talk to me when we get back to 10 cents. And if anything, again, let's measure it. Let's keep it measured, where we're probably in this final down ditch, where for not only for the year but for the move, what you'd look for is some kind of extreme move, 1618 sell off, something like that. That puts you, again, talk to me, it's under 20 cents, 17 cents. We're in this final. This is a 1618 throwdown move. I wouldn't even touch it till then. In fact, crypto, here's something. And we took a couple shots at this one, crypto.com, but another one, just massive grind lower, did nothing off of our major patterns from June. I mean, really just not much there. Even back-to-back patterns. This is more of kind of the evidence of absolute failure to zilch. Maybe crypto.com goes to a penny. I wouldn't even look at it till a penny. Just on fundamental kind of valuation of what is this, with all the other brokerages blowing up, and then you hear that 20% of their reserves, 20% is in another coin, Shiba Inu. That's a scary proposition. Here's your SHIB. And again, this is all, I just don't understand how people can have this and hold this as like a quote unquote reserve when there's zero intrinsic value behind something like this other than a big money bag. That's all that is. And there you go, SHIB. For our purposes, the patterns, the deep crab, the shark, just you continued reckoning. You go under, there's no doubt we're going under 7. You go to new lows. You go to new lows there. Folks, it's going to be tough. A lot of people, and again, I send my best to those people that got burned, either through an exchange or even just hodling. But use this time, use these lessons to learn how to measure the market. Develop your strategy. But you're going to have to take the takeaway. Here's a little side note. This whole situation reminds me of the dot-com stocks that blew up. Things like Amazon, that was hundreds of dollars a share, and it went down to like $10 or $20 a share back in 2000. And that was one of the reasons why I switched to incorporating confirmation signals, because the bullish patterns in that extreme downtrend kept failing. I should spend a whole session on that. It's a tough time. If you're a crypto enthusiast, I send my best out to you. And I don't think anyone should get complacent in this environment. Here's XRP, which I know a lot of people are cheering for XRP. You got a couple of, check out the patterns. Listen, we did this big return phase, and XRP on the daily, weekly, 32 cents was the big number for XRP. Here you go. Big bat pattern at 37, couple of daily things at 32. These are minimum numbers, and I wouldn't even look at XRP until you could get back under that 32 to 35. Even with this bat pattern, that says maybe 27 cents on this move. There's nothing here. From a harmonic pattern perspective, nothing here, folks. Really quick. It just is the easiest way to sum it up. Now, before I jump out of crypto, you need to look at some of the ones that are collapsing. Like, look, Coinbase is a real problem. And this is how we know the industry's falling apart. Coinbase, new lows. Now, we had to type 2 shark right here at $79. Last week, we hit target 2 at 48. Okay? So, type 2 reversal almost done there. The only thing you consider now is just ride that trend line down. And this continues lower. I just don't see anywhere this stops. Coinbase, just get the all-time chart, people. This is going to be a history lesson. Give it a year or two. You're going to realize the impact of faulty or failed IPOs. And that is certainly one of them. Until that could trigger, look at your HSI. And this is also something we have been talking about. This still is not even oversold. In terms of price, seems like it's gotten enough of a beating, down almost 90%. But when we apply the metrics, put on our indicators, all right, nothing. In fact, keep selling it down. There's just really not a heck of a lot here in Coinbase that gives you anything. Here's another one, kind of a side story is this Silvergate, which is back end to some FTX investments. A lot of people are thinking this goes to zero. Well, how about just get down to your 886? 886 is like, where's your 886 minimum on Silvergate? It would help if I measured it properly. There you go. Where's the 886? 886, you're under 886 already. We talked about that last week. My fault. 34. Failing the 886 like it is, again, you go back to static support. $10. $10. And then how about good old Michael Saylor? I got to think the reckoning's coming for him and MicroStrategy. 155 new lows. And what do we have here? Well, folks, I'm going to throw this out for everyone. We have pretty remarkable Gartley structure that set this off on the weekly. We're going to come back and retest the hop level at 95. Your hop is at 83. Yes, harmonic patterns work this way. Did we know that it would get all the way to that all the way down there possibly? No. I mean, we've been talking about this breakdown as more of a meltdown in the progress. Maybe this could be something where you fish out some 100 puts. What are those trading for? This is because I really want to start talking more about options too, because I think, since crypto, and a lot of you are in here trading crypto exclusively, this is going to be my shout out to you to start to embrace other markets. You're going to need to. You're going to have to open it up. MicroStrategy, yeah, even on the 1 hour time frame, look, hop level 135. That's 20 lower. Let me get an angle on some puts. Where's MicroStrategy puts? Let's see what like some 100 puts are going for right now. And let's call it out till like deck 30 puts. Yeah, they're trading amazing. Current deck 30, deck 150 puts are trading like literally $25 over strike. Amazing. That would be one way to look at that. Longer term, though, some of these that have gone so far, I'm going to give you a couple of ideas of things that are happening now that I think we could play that are not as far along as this is, but let's stick to the levels. I think the hop level at 135 on MicroStrategy is easy. Easy. The timing on options is what makes it seem scary to me. Absolutely, Victoria. The timing in terms of what you're really talking about is time decay, theta. We got to get it right. That's why one of the things with doing the scalping, short-term day trading with options, you have to put in the time. You have to be willing to do the work, and you have to set yourself in there, lock yourself in like a pilot, and be in front of the screen. That's critical. That's a little bit different for me. I've been through that. I did that grind phase. I did that, in my 20s, 30s of the day trading all the time. Now as a dad and with other things going on, I'll play things a little bit more further out, but you still have to get the timing of it right, or the time decay will kill you. Yes. Lalo's saying he hates how expensive options are. You have to put down a huge investment to maybe make a profit. I think it all comes down to, and Lalo, that's a great point. I just think that comes down to what you're going to target. We'll look at some of the examples in a minute. All right, but these, yeah, you have to be in the right place at the right time with it. In terms of the patterns, we'll look at a couple of things that are currently shaping up where we can take advantage of where it is in the harmonic pattern framework and how to price it out. The key with the options is automatic limit profit order and small loss, set small loss. So that's all about positioning. Let's one really quick before I get out of here. Total crypto market cap. Sorry. Look, ever since the daily, there you go. The daily HSI checkback that is happening. Well, today you just hit it, 750 billion. And is that a shark? Yeah, that's a shark on total crypto off of the prior low. So you're now underneath there and you're checking back. But even if that was a successful check back, you are 2 bullish days away. And this is one of our strategy points. So we have a pattern. It defines the levels. Then we get the trigger. Great. Step 1, step 2, in there. Done. Then we're looking for that check back, because this noise here, that's all it is noise. The real point for the pattern is on the check back. It hits. There you go. Go time. But now let's throw 2 more bullish bars, especially with something so vicious, before I would expect any kind of reaction. And in this case, look, if this is going to fail, it's going to fail over the next couple of days and go straight to the hop. We'll know, and then, I would say by tomorrow, we get a bearish candle down. We're into early next week. You'll know if that's anything. The key to understand is you're early on the pattern no matter what. And we'll look at some short-term time frames where that helps, especially the 5-minute. But crypto, folks, put a fork in it for now. I mean, for a long time, I don't care what your concerns or whatever. Even the reactions, I don't want to be trading the reactions until further notice. How about that? Yeah, Laser D, we're going to do options. So the seminar, there's a great comment about the seminar. Seminar on December 10th, folks. Okay, on December 10th. Let me see here. Go here in the Black Friday special. We're going to talk about options. Yeah, and here's the basic. Here's what we're going to talk about. Okay, where the type 1? Where does the type 1 begin and end? And I've talked about some of that. There's going to be new stuff, because I really want to get to the type 2 return phase. If I can help everyone decipher where type 1 ends, the type 2 begins, and understand they've got to follow that framework, it's going to keep you out of a lot of trouble. That's why I said for the second session, why the type 2? Here we go again. Yeah, I'm back. Tell me, guys, if I'm having a problem. I don't know what's going on with the internet today again. But the options, I think, listen, in any market, and I think we're in an ominous situation, you're going to have to get with more of the option style markets, the stocks, a lot of the stocks aren't moving that well. I think options are probably going to be your best vehicle going forward until we can get real clarity on the whole market. Here's a let's jump over to the regular markets now, and let's go to the SPY. Here's the SPY. All right, listen, daily pattern sits there on the SPY. What are they? Bat pattern. Last pattern when we looked at on the SPY was 411. Hop level at 425. Basically 4250 on the index. Ever since then, it's been a dive back down. And we know that shark pattern here all across the board. And on the futures chart, on the S&P futures, we know 3550, huge number. The question is, okay, where are we going to go from here? Is this the real type 2 that gets you back up to target 2? Or is this just some kind of nominal reactive move? We've spent 5 days sideways at this critical level after the break, right? Basically just a shy under 400. Nothing here yet in terms of a bearish signal that would trigger the rollover. The only thing I would look for, we're sitting right on the trend line right now, and watch a 3-bar breakdown. That's all you need to see, a 3-bar breakdown under essentially 390. Then you got real issues. Yep. Let's keep an eye on it. But at least the patterns are there. Here's our 5-minute. And again, let's do a quick follow-up from what we talked about this morning. Look, we came into this morning. We had a bat pattern here. And this, and then actually, here's what it was. It was a smaller inside bat there. To show you. It was like this. In the pre-market, it was that smaller bat. It morphed into something a little bit different. We still treat it the same way. But that was the trigger. Essentially, where's that? Around 395. And this is going to be helpful. All right, this is where the framework and some option strategies really going to, I think, clarify for a lot of people the direction. And direction, I mean, immediate direction, so critical in anything that you do. If it's going to be patterns, VWAP, we need the levels to really discern exactly where turning points are going to be. Now, the framework is what helps us, because this was that early pattern. Look like there's that bat pattern, all right, before it became something bigger. We know that that reaction, it ended in the pre-market. So the way that I think about that, if I'm looking at that, pre-market had popped a little bit after forming that low overnight. Well, I just think reaction. And again, for what we do, folks, with harmonic patterns, we always want to be thinking reaction reversal. Why? If we know that this move is a reaction, and it can be daunting to say the least when you see something surge up, especially on the open, yet your signal says sell. That's a hard thing to sit in there for even 20 minutes and say, is this really going to work out? When you know that your return phase, the type 2 return to retest the zone, has to happen. So what does that tell you? Well, that's about the limit for the pre-market bounce. And for this to even be anything, you got to come back down. Now, again, we're talking segments. And what we want to focus on is something like looking at target 1 with confirmation, and that pinpoints your number. 395, that's your number. 395. And just automatically, the way the framework comes together, we know we have to come back down to do the retest at 393.57. So that's a 1.5 to shoot. Now on options, folks, this is where it comes into play. That your option here on the market, basically what that says to me, Whatever the early open is, you want to fade it. You want to sell it. Because we're looking for the return. That's when we put the framework. Describe the framework. Describe the 1-2. That's my goal for everyone in here, for you folks to understand the reaction, the reversal, what it takes in there. That if you know that you're in this point of the reaction over, by definition, and mechanically we've got to retest the early support before we can expect anything. Well, that's a high probability profit segment, I like to call it. And that's something where then you bring in your VWAP. It could be EMA or whatever, but your VWAP can be helpful. And I don't think I've ever showed VWAP like this, or even probably never even talked about VWAP, although a lot of people are using it with success. We overlay the patterns. Tell me what the blue line's doing. The blue line trending down since Friday, like that. And we know that that trigger HSI, that's the end of the type 1 reaction. We need to go into a return phase. So if you're around there buying 395 puts as a scalp and your target 393.50, okay, that's it. So your limit order there, out. I mean, there's two ways to do it. Limit order, get the option feed up, and again, I think I'll spend another session looking exactly at the exact option contracts. Although the data, I think, is probably cost prohibitive for a lot of people. I mean, option feeds can be $100 a month or more. But I would look at it this way. One, your risk is super small. You get $100, $200 of options to double, triple your money, as long as you have your automatic target in at the level. That's the key. Limit order. When you get in, limit order to get out. Otherwise, you sit on your hands, definitely the option play is going to get past you. Believe me, I've been there, done it too many times. Catch a huge move, and because I don't have my limit order to get out, I give a lot back. It's one of the keys with all of this. But at least currently, all right, that segment is what we're focused on. Now we have, just for right now and for today, we'll come back to this in a little bit before I wrap up, but we have a clear type 1. Off of that, another type 1 on the bat. Done. It just hit the target 1. You popped above the VWAP again. I bet we come back down again. 394. You're 394.37 at the moment on the 5-minute chart. No HSI? Almost. But you're above the VWAP, where a lot of these VWAP guys would say, all right, I'm going to fade every pop today. Pop above the VWAP and head back down. And that would make sense with the pattern. You know, look at the pattern. Go back to XA level at 393.57. Okay, that's almost a full point from where we are. And I'm talking now. I'm talking right now. If you're a futures trader, you're looking to click that button around, what, 390. What do I got here? I got December contract at 3955 at the moment. To come back down for shoot that return phase off of that second pattern. QQQ, same deal. On the 5-minute, it actually might have even been better this morning. Here's the Qs. Qs look like this. Nice VWAP pop, but check out your patterns. I mean, amazing. Look at this. It was a deep crab that completed in the overnight and went up to target 1. 284.47 on the open. I mean, that's amazing. Tough because there's no HSI, but again, what direction are we going to play for the day? VWAP helps. You're trending lower clearly on your VWAP. And then Harmonic pattern says, all right, this is a reaction in the pre-market, hits target 1 right at the open, look for the return phase. Look, this VWAP's a lot uglier on the 5. Oh, that's a 1 minute. No, that's a 5-minute. It's a 5-minute Q. But the VWAP looks even uglier where, you know, you get one more pop up there. This should continue lower. If we were just take off the VWAP and tell me about the pattern. Here's the pattern. Okay, you come back in the zone. Any confirmation? No. HSI now showing a bearish on the 5-minute. Folks, you trend lower until you can register another bullish HSI. You're nowhere to be found. I hope these little insights can help better describe how to look at the zones, how to look at the framework, and describe what you see. Describe what you see. Now, let's look at a couple of things that we can take advantage of on a little bit longer term time frame. Let's go to some tech stocks. And I think, well, the Qs, for one, even on the largest time frame, they look like they're getting rejected at target 1 on the daily. On the QQQs, a little bit different than the index, did a type 1 up to 289. So if we're looking for the return phase, 265 on the Qs. 265 from where we are now, and we are really close to finally getting a 3-bar failure. And we were in here last week. We talked about this candle. All right, we talked about this bearish or it was bearish, and then they saved it. They brought it back in and rallied it back. Terrible action. Tell me what's happening since we hit target 1. Bearish, bearish, bullish, bearish, bearish. My guess is this thing comes back for a full type 2. And these return phases can be some of the most dangerous reactive moves, especially in a downtrend, where reaction over, we go into the type 2 return phase. That can be pretty vicious. Come back down one more time, maybe back down to the hop, 256. That's how we read it. That's where the patterns come in to really clarify the levels, the structure. We saw that in a number. We saw that in Coinbase. Here's PayPal. Another one starting to really break down. All right, a couple of back-to-back patterns, but check it out. Coinbase made 2 massive moves this summer. 69 to 100, back down to 72 to 90. Well, where we are now with Coinbase, trending lower, and we're under target too. So look for this to shoot the gap, 83.34 to 72. That's how to play this. You have to have definitive shoot the gap targets. No holding it open-ended. Hopefully it'll give me a monster move. No, we have real definitive levels here that we're looking for. One way to play PayPal, look at their 5-minute chart and just wait for 5-minute levels to set up, get hit. Couple of bearish. We had a bearish pattern just on Friday or Thursday at 86, trending back down. This is going to be another thing I will do more of, with not only with the seminar but in our future sessions. Listen, I want to feed people actionable opportunities, not financial advice, but I want to put you guys in the spots where this is headed and the vehicles that are going to work. All right, especially the exodus that's about to occur. Believe me, the exodus from crypto has not happened yet. It has not happened. And those that will remain, you're going to have to adjust. And again, crypto is not much different from option contracts. Option interface, go to zero like crypto, or positioned properly, give you massive reactions. That's what I want to focus on. Massive reactions. Now, 1 or 2 more. Here's some interesting big markets that we've looked at where you do have patterns. You have a lot of interesting things going back to back, or needing a type 1 return, a type 2 return, sorry. Here was Qualcomm that did the big type 2 return. But that wasn't the one I wanted. Where was the one? One I wanted was SAP. All right, SAP, good one. There you go, shark pattern. Off the low, all right, you're about 108. You were as high as 113 last week. 119 is target one off the crab pattern. All right, and this is something else where our back-to-back pattern framework, when we go from bullish to bearish and you're up at a type 1, listen, this is another ideal spot for strong reactive option moves. Strong moves. And this one, it's starting to stall here, but keep an eye on SAP. This is one of our new 3 ideas for the week, folks. I just uploaded that for gold silver members on the site. Okay, but why? Why there, or why slightly higher? Because you have the type 1 terminating up there. That's where you want to look for it. Another one. I meant to put this on our 3 ideas, and I probably will update it. Okay. Here's a type 2 Royal Caribbean cruise line. All right. Beautiful. Let's just blow up this crab right here, type 2. Now, type 1, ideal, down to their targets, all the way down to target 2. We're usually just looking for target 1, but that's okay. And now we're back up above the hop level. Any confirmation up there? This is what is helpful to tell us either more time, just get it on the radar. No HSI on the type 2 just yet. All right. Need HSI. That's also something else as a requirement for the type 2. Keep an eye on that one within the downtrend. But that was SAP. What was the other one? Oh, Shopify. Shopify has another one that, let me go there. There, it's already off 2 today. Hold on. No, not. I'm sorry. I get those confused. I think it's Block, and Block's down today. Where'd you go? Square. Hello, SQ. There it is. I think that was a 4-hour time frame. Oh no, there's the bat. All right. Square. Here's another one. Again, it looks like it's got it's already fallen a huge amount. Well, Friday was your first 3-bar. Okay, really with a bearish close, and here's follow through. Square. There's your reactive move coming back down. When you get this far and you break under target 1 and you're in the return phase, go for target 2. Sorry, go for the return, the type 2 return back to XA. Once that's already completed. And so you're shooting the gap here. Keep shooting the gap on all of this. Today, you know, a lot of these are already rolling over. Yeah, S&P's rolling over. Right now, Qs are rolling over again. Let me do 1 or 2 more. Was it Micron? Hold on. Oh, no. Here's Mosaic. Here's another one. We've talked about Mosaic. Doing the type 2 return. Up to, yeah, up. We've been out of this since like 55. I'm looking for complete test of 45 level. 1 or 2. Oh, here's Meta. Meta, I think, is ripe as well. Meta, I think we can all say Meta failed the hop level, 116. And even on the weekly, check out the weekly. Under 116 of the weekly hop. Now, daily time frame for this, Meta, triggered, checked back, 1 bearish candle. You get 1 more bearish candle. The likelihood of this not only to go back and retest the lows, but to go under the new lows, it's just another continuation in this downtrend. Longer term, target the 109s. Let's see what the 109s are trading for right now. Hold on, let me go to my other screen. So What do we know in terms of time frame too with options? This is something to think about. Okay? If we get a trigger, any trigger, every level, apply a 30 bar window to it, because that's a question I get a lot. How do we know how long? Like what contract week or month do we target? So if I'm on a daily time frame and I'm here and I'm expecting this to be a massive continuation signal on Meta, all right, I'm going to go 30 days out. Basically puts me right to Christmas or a week before Christmas. Looking at that 30 bars out, where do we go to retest? What's the next level? 886 down here. Retest the lows at a minimum, looking at that as your continuation. And even if you wanted to wait one more day, what you're going to see is one more bearish candle tomorrow, and this gets a flush. I think it's already there, and with the breakdown today, yeah, look for this to start the roll over. Let's go to, what was the other one? Where's Amazon? Get back here. Amazon. Yeah, Amazon did the same thing, but last week, no check back. Again, looking to come back down to these lower HSI levels around 88. This is not the Amazon really ugly reaction off of the type 2 return phase. Definitely scary point here. Here's ARK, folks, coming back down where hop level at 30 minimum. I don't think there was, this weekly as well. Okay. Now, the other thing about a lot of the big patterns that we have seen, and for those using the software, I really want to emphasize that this is something to be, I wouldn't say concerned about, but it's a relative important factor. Okay, the hop levels that you're going to see on these massive patterns are valid. They are important, and they're possibilities. For ARK, that's $15 on this move. And so how do we play that? What do we look for? Some kind of, I would say at this point, when we're failing these zones, and there's a lot of situations like this where we came back and we registered a bearish signal in a bullish zone, pull up your 5-minute charts, and this is probably going to be an option strategy going into the end of the year. All right, this one, that's a little late, obviously. That the last one around 38 just opened up, flashed down. There's going to be other ones that I will feature. I'll bring up some tomorrow of things that we should be looking for, or at least positioning into year's end. But this is getting our time frame is right. Getting it right is critical, because what do we go off of? The daily time frame, it looks like it's already fallen, or what's the expectation? Your expectation is continued failure with all of the things that we have seen in these larger zones. There's even ARK is showing even a small shark it's trying to hold, but it can't. And what you see are unfulfilled or unfilled hop levels going lower. The real lesson that we've seen in the last couple of months, harmonic pauses that just go dud for 30 days and grind lower to your lower levels. I think that's more of what we need to trigger off of for the real basement scenarios of things that are absolutely just not showing any signs of stabilization. In fact, continued decline, like Meta. These other high flyers, the thing that I come back to with, again, the big distribution curve. Why are these signals? What is the precedent here? You want to talk past history. If we're going to blow these up, which they are, I mean, this is, I've said it before, this reminds me of the .com bust, where a bunch of these have to go either to bankrupt or they need to go to fractions, under $10, down to $5, something like that. Again, this is more of the scenario now that we've made it that far. We've come down. We've spent, amazing. That's your weekly chart. And look at, since we completed the pattern, okay, 30 bars is to this week is 30 bars. And what are you doing? Sideways to down, go to your next level. Next level's hop level. And for a lot of these overdone bullish patterns, the hop level is the logical choice. Why? There's no confirmation. There's no stabilization. You're making new lows as you go into the end of the year. All of that sets us up for, I think, a real washout. So I think I have to realize there's plenty of time. Even with this going so far, if we're going to get some of these to go bankrupt, okay, or more of these to go bankrupt, okay. If you're going to get the crypto to wash out or more tech stock catastrophes, yeah, they're going to happen now. They're going to happen now and go into the end of the year. Conversely, and here's the last thing I wanted to update before I get out of here today, is stuff like nat gas is the Boyle, UNG. Those are popping off now, and I find that really interesting. Look, okay, Boyle now trading 47, 48. We were really honing in on this over, was it a week or 2 weeks ago on the first pop, but we had the check back down here. It was around 32, 35. Came all the way back down. Now you're set up. Now we're still targeting 75. But that's completely different from, say, crude oil, which is tanking today. Crude oil down, I think it's $4. Real split market. Really a split market. So keep your eyes on those big techs, energy in general. Is nat gas going to be a one-off? I think nat gas will do a minimum reaction, and we'll look for it, maybe up to 75 on Boyle. UNG is now off that 20 handle. Where's UNG? Up to, almost 22 now. That's where you're really starting to develop. And again, still a reaction. Even though it looks great, I still say that's a reaction phase up to 25. Let's get into that tomorrow, and let's talk some real specific options, longer term stuff tomorrow based on a lot of the relative patterns of these structures. Because a lot of these do look like they need to come back and retest. A lot of them, I think, are rolling over where the only possibility is to go hit hop levels. And that can be a sizable move. I think we're failing dramatically in a lot of those big name stocks where, you're going to go back and hit those levels, which have these short segmented opportunities. Something like, again, Boyle. We're not looking for anything to blow off. We're just looking from point A to point B or point D to target 1. And that's it. Dalton, a couple of you guys asking me about the VIX and UVXY. We talked about that last week. It should be popping off. But again, here's why the markets and the patterns, the narrative versus the pattern is so critical. Here's the BAT pattern. What did we say last week? We need 2 bullish candles. We need 2 bullish candles, and we don't have it yet. There's the check back on the pattern. We had 1 candle, but we still don't even have another bullish candle. We're in the zone. XA's at 23. Maybe the hop as low as 19, but I still need 1 more bullish candle. That's why we're waiting on those more so now to give you kind of a definitive price action signal off of this HSI pattern, HSI, okay? But give me 2 bullish bars, and if it can't do that, all right, I wait. And that's why VIX isn't doing anything yet, but pretty soon, hey, give me 1 more day. One day, and then we would then prepare for a turn in the VIX, but not until then. We'll come back to that tomorrow. We'll talk more options tomorrow. I'm going to do some longer term stuff, and we'll get into bonds because bonds are not the rate. The yields are holding up there. Come on back tomorrow, 12 noon, and we'll be off on Thursday. Again, get with us, folks. Join us on harmonictrader.com. Get with the Black Friday special. Get your software free trial, please, because that's what's doing all of our levels. If you have any questions, reach out to me on the Discord. Until tomorrow, folks, have a great one. As always, go get them, and we'll see you then.